NPC2018. There's a Wi-Fi in the name of NPC Docomo or something. For those who are having struggle connecting, you can open your Wi-Fi and connect. The hashtag to tweet on anything that interests you is hashtag NPC2018. So I come from a very long time of using cash for a very long time in my life, and everything I bought I had to buy cash. And I was one of the first people also to get myself a credit card. And I remember you take your credit card and many places don't accept your credit card. And if you walk in and many places that do accept your credit card, uh, minimum 150 rupees transaction, sir, or 200. And even today, there are many places where if you want to use your card, 1.5% extra, sir. So we have still not conquered that divide from cash to any other form of online payment, right? And at FinTech, it's not just that divide. I still wonder today, how many of us really understand financial planning as a subject? How many of you have your insurance in place? How many of you have your home insurance in place? Wow. Fire, property. I can bet you more people have their Honda Cities insured than their own lives. 8 लाख का गाड़ी ज़्यादा वैल्यू है, वैल्यू से, खुद का लाइफ से. Yeah. And I don't blame you for it. I'll even tell you, coming from a background of insurance, that products are still not designed to meet people's requirements because we as a public are not aware and are not demanding what we should be asking about. So hopefully, you will have not everything covered today, but start going deep into some of these questions as to what's happening in the country. Do you really understand financial planning? Why is India unbanked? Despite everything that we talk about, we are happy with the mobile revolution where more people have mobiles than access to toilets. But is that really success and big thing? Is that really the change that you are looking to see in this country? Or more than that? Are we really just happy about that? Anyway, as it comes to FinTech, according to an EY report last year, India is growing at 52% in terms of FinTech adoption, which is only second to China, which is at 69. So we are the highest, not just, fortunately our FinTech adoption rate is much more than our population growth rate. It's a happy problem, right? So to kick off today's session, I'd like to, our first speaker is from Mastercard, which is a credit card company. Incidentally, Kush, I'm a HDFC Bank customer, and 3 days ago, HDFC Bank took away my Mastercard and gave me a Visa. So maybe you can look into that later on. Personal problem, offline discussion. So how Kush is going to talk about how we're going to, move ahead in this cashless economy. He's a seasoned business leader with deep value creation. When I say deep value creation, he likes to work on transactions on scale. Good thing, right? In the few minutes that I was talking, I don't know how many transactions went through on the Mastercard server and got authorized and processed and things like that worldwide. Value creation, P&L growth across payments, retail, financial services, healthcare, and everything that he does is around high tech. Right? And somewhere around the life, he feels life is going too fast, too quick, and doesn't get time to actually look after himself. But we must, right? Anyway, with that, I'd like to, hand over to Kush to talk to us about traversing the cashless economy. Please welcome Kush.
Thank you. Can you guys hear me? Excellent, excellent. So I had a presentation, but I feel like because this is a good, intimate group, I'll just talk. And then, hopefully, if I'm able to wrap up a little bit sooner, I'd love to have Q&A and we can have a bit of a conversation. Plus, I like this title, so you guys should keep seeing this all through. So look, I want to start a little bit with how we, as Mastercard, and how I personally see cashless and where we think ecosystem-wise we are on our journey on cashless. So I'll talk a little bit about opportunity. I want to talk a little bit then about, how, how sort of one should go about driving to cashless, right? So if I think about countries that have gone through different levels of journeys and adoption on electronic payments adoption and fintech adoption and driven cash out, we see some common patterns and some common approaches in those countries. And so I'll touch upon those a little bit. I'll talk a little bit about Mastercard and what we are doing there ourselves. And then I'll end with, because so many of you are startups and entrepreneurs, I'll end with a little bit of sort of how Mastercard engages with entrepreneurs and with startups. So that's kind of the rough outline. That's the intent. I'll try to wrap up with a little bit of time. Would love to keep this interactive, right? So look, we've been around for 50 years, over 50 years. We started with the intent of driving cash to electronic. And so we've lived that in spirit forever. But we've gone from the narrative on that has taken on real intensity and taken on real pace, I'd say, in the last 5, 7, 10 years, right? And if you think about the world out there, we are today, if you look at the person to merchant payments market, that person to merchant payments market is about, it's about $15 to $20 trillion electronic today. That's the total card volume that happens in the world. So $15 to $20 trillion electronic. I call that by and large truly digital, because that is an end-to-end, no paper, completely digitized transaction environment, right? You've got about $115 trillion worth of what we call legacy digital or partially digital. And that is basically what I would call old school ACH, right? So payment from any bank account to any other bank account, lots of it happening in emerging markets where part of that value chain is either paper and ACH, and it's slow and it takes 3 days, 5 days, 15 days for monies to show up. There are questions on security, so on and so forth, right? So that's, I'd say, legacy or partially digital. And then you've got cash, which is another 100 trillion, right? And so the total opportunity that's in front of us adds up to about $225 trillion, right? That's the number, of which only 15 to 20 trillion is truly digital or electronic today. So this question is a very good question. How do we go more cashless? And I think it is a tremendous, tremendous opportunity that is ahead of us versus behind us, even though companies like Mastercard have been on that journey for about 50 years. So that's, to me, message number one. Message number two is, we talk about cashless. We are fixated on cashless. Cashless is what has captured the imagination and in people's minds. But if you think about the universe out there, if you think about the way countries stack up, there are actually very, very few markets that are truly cashless, right? So I can point to Nordics, Scandinavian countries, South Korea, but very, very few countries have actually crossed what we would call the 70, 80% threshold on cash penetration. And they are truly cashless. There is a large swath of countries and markets that fall within the bucket of what I would call less cash, right? So not cashless, but less cash. And they to me are US, Western Europe, more sophisticated markets in the world that are, say, not in Asia or in Latin America, Australia, Brazil. So large, most of the countries in the world out there, I wouldn't say are actually cashless. They fall within the 30 to 50, 30 to 70% cash penetration. And look, in those markets, cash is still used widely for a variety of use cases, right? And so I call that less cash. And then you've got what I would call cash resilient or cash strong markets, where cash, people love their cash, right? They'll go to an ATM, they'll take out cash and use the cash to pay at a place which has a point of sale terminal, but they will use cash. They won't use their card, or they won't use their digital payment solution. And I think historically, India has been one of those markets, though the migration that India has been on, the journey that India has been on over the last 2-3 years is tremendous. And I could see, I think we can have a credible debate today on whether India is one of those cash strong markets or whether India is a less cash market. But it's definitely trending in one direction. And I think that's excellent, right? So that to me is, I think, message number 2, which is not all markets are the same. You've got cashless, you've got less cash, you've got cash strong, and that less cash is a lofty, it's a good enough practical goal to have in the near term versus drive to cashless, even if our narratives and our imaginations are captured by cashless. And if I think about the countries that are doing this well, right, countries that have gone from being cash strong to actually being truly cashless, or even have gone to that less cash bucket, there's a bit of a blueprint on going cashless that emerges, right? And to me, that blueprint is a 2-part blueprint. One is you've got to set the context right, and the second is you've got to have the right solutions in the market. And to me, the right context is really about, the right context is really about, first and foremost, top-down motivation, right? Are you motivated as an economy? Are you motivated as a country, as a citizenry to go cashless? And I don't think I have seen any market in the world with the kind of motivation that I've seen in India. And this comes straight from the government. It comes from the Prime Minister, and that is excellent. You need, in that context category, you need incentives, because no single player will make you go cashless. So you need an ecosystem of participants to play with each other, and there need to be the right incentives to talk to each other, to play with each other. You need and invest in the right capacity building. You need engagement, and so standards bodies, and NASSCOM to me is a great example of that in the tech services space, but standards bodies and forums that bring payments players and technology players and fintech players together to represent a collective point of view. And you need, a high quality narrative, right? And so I think there's a bunch of stuff these countries that have gone cashless have done, which to me is really about setting the right context. And to me, it's, that's things like top-down motivations, walking the talk, getting people and your citizenry energized and excited about this, and drive what I call cash agnosticism out, right? So today you've got, drive what's called cash aversion out. So cash agnosticism or cash aversion, engagement models, and so on and so forth. That is one part of what this blueprint for cashless looks like. A second part of what this blueprint for cashless looks like, in my mind, is then the actual solutions that get put out, right? And there, Mastercard operates with 4 or 5 principles, which are hard learned through our experience over the last 50 years, which I encourage all emerging fintech and payment players to get excited about, right? And so to me, those are things like, first and foremost, a scalable, resilient, secure infrastructure. You need that in an environment for electronification and for digitization. A second is what I call reach, which is easily translated into acceptance, right? Markets that have driven cashless have done so on the back of massive merchant engagement, massive SME engagement to make that happen. And if I think about India, what I see with the kirana store, the small merchant, is perhaps the most exciting in acceptance and engagement that I've seen ever before, right? There are very few examples of SME engagement in driving acceptance in other markets versus what I've seen in India. And we are still in very early days, right? So we've gone over the last, 2-3 years from 1 million points of acceptance to say 5 million. Our belief is that that number needs to be 20 million or 30 million to drive to cashless in India, right? We are 1/6 of where we need to be. And the good news is the Indian merchant is showing propensity to make that happen and to drive that. So all we need are the right solutions for the Indian merchant, right? So reach and acceptance, in addition to the infrastructure, is to me number 2, right? A third category is really, on the solutioning side to me, is what I would call the collective trio of identity, privacy, and security. Payments, if you've been in the world of payments, used to be anchored on a product called authorization, right? Which proved that, hey, Sunil is good for his money, right? When Sunil went and transacted at a merchant, it proved Sunil didn't know the merchant, merchant didn't know Sunil. And what that authorization product would do is it would tell the merchant real time that Sunil is good for his money. That then went over the last, I'd say, 15 years and got translated into a layer on authentication, which said, okay, not only do I need to know that Sunil is good for his money, I also need to know that the person claiming to be Sunil is Sunil. All right? So we said authentication and authorization needs to go hand in hand. And, two-factor authentication for our digital transactions and so on and so forth became part of that layer. And what we are seeing now across the world is that there's a third layer being introduced, which is the identity layer, which is saying, look, not only do I need to know that Sunil is good for his money and Sunil, the person claiming to be Sunil is Sunil, we need to know that Sunil is Sunil, right? Which is in effect, saying, look, I need rooted identities. I need whatever is the national identity equivalent or validation or KYC equivalent of validation embedded as part of the transaction stream, right? And so you can see that identity and security go hand in hand. We are also living in a post-Cambridge Analytica world where people's identities have been compromised. So while identity is important, we've got to be careful to make sure that those identities don't become the honeypots that ultimately get compromised. And so there is a solution category in our mind around privacy and enablement of privacy, which is a third part of that holy trinity, right? And so to me, the third key element in that solutioning layer is identity, security, and privacy. And then the fourth one, which I will talk about, is the fourth one in the solutioning layer is what I would call collaboration and interoperability, right? And that is because at the end of the day, and we've seen this, right? Like, at the end of the day, a consumer doesn't care about an electronic transaction. They care about what a transaction enables, right? Nobody wakes up saying, okay, boss, today I'm going to pay with my credit card, or today I'm going to pay with my Paytm. They wake up saying, I want to buy this, I want to buy that, I want to book my ticket to Singapore, I want to travel here. That's what people care about, right? Which means that the underlying mechanisms for payments or transacting need to be seamless, smooth, and hidden, right? Or I'd say transparent to the consumer. Also, consumers don't care about transacting in one jurisdiction. Human desire transcends jurisdictions, right? So nobody wakes up in the morning and saying, hey, today I want to transact in Bangalore and tomorrow I'm going to transact in Delhi, or today I want to transact in India and tomorrow I want to transact through a merchant in Singapore, right? People want to transact wherever they can transact. This is like human desire for consumption. So why is this important? This is important because from a fintech enablement standpoint, it is very important that we build interoperable systems, because there is no way we will be able to drive that transaction to be hidden, seamless, smooth, safe, secure, transparent without interoperability between, say, whatever might be enabling payments in India and whatever might be enabling payments in Singapore and Europe and so on and so forth. So interoperability and collaboration to drive that interoperability are very important elements of sort of that solutioning layer. And the last I'll say is security, right? And security is, look, you can spend 5 years, 10 years, 50 years getting consumers excited about using electronic payments and driving cash aversion out. You will lose them in one day. In fact, you'll lose them in an instant. The moment they get compromised, the moment their credentials get compromised, their cards get compromised, their monies are lost, their identities get compromised, you will lose consumers. And you will lose them for the next 5, 10, 50 years, right? So those 5 things, in my mind, represent what I would call the solutioning bucket, right? So take a step back. The blueprint for roadmaps, the blueprint for engagement is really, or the blueprint for cashless is setting the right context. And I think policymakers, governments have a big role to play, and driving the right solutions. And that's all of us, right? That's the private sector. It's companies like Mastercard. It's startups like all of you guys. And elements of those, the things I sort of went through, right? Overall, my view is India is actually very, very well positioned to drive cashless, right? You've got a very motivated government. You've actually got, both in terms of private infrastructure and government infrastructure, scalable, secure, resilient, efficient infrastructures. You've got a lot of groundswell. You've got consumers and merchants that are excited actually about transacting. Our research shows the Indian consumer, Indian merchants actually care about transacting themselves versus what it enables. You've got a rich ecosystem of competitive activity. And so there's, I think, a lot of excellent raw material for India to go cashless. The question to me is, how can we organize ourselves, structure ourselves to drive acceleration on that, right? And I think that's where there's the opportunity for us to have a conversation. And so if you think about sort of how what Mastercard is doing and what specifically we are doing in this context, we are, I'll say a few things, right? So I think of us as the original champions of cashless, as the original champions of inclusion. And I don't think there is anybody who's a better champion for this than our CEO, Ajay Banga. So if you've not heard him talk about cashless or heard him reference it or talk about financial inclusion, just Google it, and you will find plenty of inspiring material to do that. But I think on mission leadership, on mission framing, I can't think of a better private sector enterprise than us to drive cashless. And I say that with pride. On the context piece, again, we've done a lot on working with governments, on working with regulators, and framing the narrative overall. So we do a lot with the World Bank. We do a lot with IFC. One of the big barriers we find to inclusion and cashless is that you need risk takers in the ecosystem to get things started. And once that happens, private sector kicks in and gets going. One of the biggest barriers to cashless has been that acquirers would not be willing to underwrite merchants of a certain kind because they don't want to take that risk. We've worked with IFC, International Finance Corporation, for example, to make that happen. We are working with CATE, which is, in the context of India, the Association of Indian Traders, to drive some of that, right? And so ecosystem engagement. On the solutioning side, look, you guys know what we do. We've got 4 large categories of products. Our core payment switch is as competitive as any in the world. We recently acquired this company called VocaLink, which is the world's only exported real-time payment system. So they power all real-time payments in the UK, and they're behind solutions in Singapore and US and Thailand. We've got deep solutions in safety and security. We've bought companies in the machine learning space for fraud prediction. We've got a company called New Data that does device biometrics and identity. We are spending a lot of time now on things like identity and so on and so forth, right? And so there's a rich suite of solutions in addition to the context setting work we are doing that we bring to bear. How this comes together to drive cashless is in 2 ways. One is it's just commercialization and execution of broad-based open-loop digital payment systems, which is person to merchant and now ACH as well, real-time ACH. But we also do a lot of work that is very use case specific. So I don't know if you read this. Last month, we launched a farmers network solution in Andhra Pradesh, which is basically digitizing payments across the entire farming value chain, driving price transparency and making sure farmers get more for the work they're doing. And this is not an India-only solution. This actually was inspired by a solution we launched in East Africa. Right? So that's how our solutions come together to solve very specific use case specific problems. And then because you're startups, what I'd like to end with is simply a startup value proposition, which is a lot of people think of us as a credit card company, like Sunil said, or as a infrastructure or Rails company. We'd like to think ourselves as a broad-based commerce and payments technology company, which means we've got, like I'm our CTO, we've got about 150, 180 what I call market-facing applications or platforms. My goal is to try to take these platforms and make them accessible to all of you via APIs, so you can build on top of me. You can leverage what I've got, and I'm going to enable you as a bunch of startups, not just on technology and my applications. We also do that via investments and sort of our startup engagement ecosystem. So we've got a program called Start Path. This is a global startup engagement program. We work with companies. We work with companies and help them navigate Mastercard. The program will invest in pilots, scalable pilots with these companies. So far, the companies we've invested in include some very, very famous names. So we are investors in Razorpay in India. We are investors in Airwallex, which is a B2B exchange. We are investors in Revolut. Not investors. Revolut was a Start Path player. Revolut is now a unicorn, and I can keep going. So the companies that we've invested in or participated in as part of StartPath have gone on to raise about $1 billion in future funding. And so, my point is, look, we think of ourselves as a utility and a provider of capabilities, technology, and capital, and we urge you and invite you to sort of work with us. So I'll just pause there. To me, I think tremendous opportunity on cashless. Cashless as good as less cash, stop in the way, and huge. There exists a blueprint based on companies that have gone through that journey. That blueprint requires your engagement. It requires policymaker engagement. Mastercard's doing a lot on that blueprint, and there's a whole series of solutions, and both on the technology side and on the sort of capital side that represent value propositions for folks in the audience. So let me just pause there. Thank you.